Very good. Thanks, everybody. I'm Steve Cobrin, and I'm very happy to have you join us today. With me is my right arm, Darren Hardison. Darren is a financial planner, an insurance underwriter, a good guy. We've been working together for a very long time, and Darren assists me in client sales and service. I am a life insurance guy. I am second generation in this business. I've had my sales practice for over 30 years, and I grew up in my father's general agency. And so therefore, I have been in the life insurance business for most of my life. From this perspective, I can tell you, I really appreciate how magical life insurance is. And I want to share that magic with everybody. It's that important. Just as an example, to show you how I found out about the magic, I'll tell you a story. I worked for my father from when I was a young kid in grade school all the way through college. And one time when I was a teen, he came home and he pulled me aside and he said, "Here's something very interesting." He goes, "I just facilitated a claim to a client." What does that mean? He said, "I had sold this gentleman life insurance, and unfortunately, he just passed away. And I hand delivered a very nice check to his surviving wife and family." And he goes, and he was struck by it. And he goes, it really affected me because this is a very trying time. People are very sorry when a departed one goes, and they're faced with all kinds of bills and obligations. And in essence, everybody had their hand out to this family needing money. And I arrived, says my father, with a nice check to make things better. And that really made an impression on me. It showed me the difference that this makes in people's lives and people's businesses. So we have this monthly seminar series to show people how important the product is, to answer questions so they can understand that probably above and beyond all the financial products in their portfolio, this one has the magic to really make a difference. So today's topic deals with using life insurance to indemnify a business against the loss of a partner or a key person. We're going to focus a bit more on the key person today because the partnership end of things is a little bit lengthy, and I think it needs its own seminar. So the format will be that I'll be interviewing Darren. I'm going to be playing master ceremonies here, and Darren will make a presentation. And we'll get you out 12:30 for sure. The format will be, if you have a question that relates to the general topic, please enter it into the chat, and I will address it if at all possible. If you have a question that relates to your personal circumstances, though, let us know, and we'll set up a private consultation. That's the way to handle that. If you need a quote now, or if you want to be pre-qualified now, let us know, because you're in the market for a policy, and we will jump to it. Pre-qualification, of course, means that when we give you a quote, it will be competitive and reliable because we'll have done our homework beforehand to know what the going rate will be and what an underwriter will do once you get your application. We want you approved at the rate quoted, and we want underwriting to go very smoothly. That makes for an optimum experience. That's what pre-qualification does. Okay. So without further ado, Darren, and by the way, Darren, your video blocked out for some reason. If you could fix that, it would be helpful. Otherwise, we'll just use the audio.
Okay.
What is key person coverage, and why would a business want to indemnify itself against the loss of a key person, in particular a partner? Can you elaborate on that for us?
Sure. I'm trying to get my video back. If I do not happen to show up, my wife finds me handsome. I don't know that anybody else is missing anything, but
well, your wife wears glasses, right? No,
two sets.
On the kid.
So okay. No, Steve, thank you, and good afternoon to everybody. When I have the opportunity and privilege to speak to people, to be in front of people, I always like to define or remind everybody, well, what is insurance? What is insurance of any kind? Today, we're specifically talking about life insurance, which is a cousin to disability insurance, which we'll talk about in another seminar. But when we're talking insurance, all we're really talking about is deferring a financial risk, right? So if an individual, a business, a family, is willing to bear 100% of the risk, we're probably not talking about insurance of any kind. However, in the real world, a business, a family, an individual oftentimes can't absorb 100% of the financial risk. So what do? We lean on an insurance company. So we're willing to pay a premium, a cost to defer the impact of that financial risk. And I think everybody understands that. It's just sometimes it's nice to put it out there and talk about it. So today specifically, we wanted to talk about key person. We're contemporaries now. We say key person. We used to say key man. We can't say that anymore. So a key individual, a key employee. It's not specific to how the business is organized. It can be a partnership, a simple partnership. It can be a S corporation. It can be a limited liability corporation. It can be a bigger company. It could be a C corporation. Okay, but what is a definition of a key person? Well, it really depends what the business is. I always like to talk in real world examples. Again, Steve and I have been doing this a very long time. I like to say we've seen every scenario, which hopefully we haven't, because it keeps things interesting when we see new challenges. A case that we're working on right now, as an example, Steve had mentioned buy, sell versus key person. And sometimes they're similar, and sometimes the business thinks it's buy, sell, but they're really trying to protect a key person. So here's the example. It was a relatively new company. It was like a sister company to an established company. 4 financial partners, meaning 4 people contributed to get this company going. However, the operations guy, the key guy, I call him the rainmaker. He's the one that's going to make the business successful. He had the relationships. He had the wherewithal as far as how to make this business hum. If something happened to him, the business would certainly fail. So we use life insurance with the beneficiary designated as the business. Heaven forbid something happened to this key guy, the business will get a large infusion of cash, which at that time, I guess they could decide whether to dissolve the entity or go out and recruit someone with a similar skill set. I think that's a good start to wrap our minds around what is a key person, why, what's going to happen to my business if Joe or Jane isn't there.
That's the key. There's a gap, and as you said, Darren, a key person could be the owner, the person that drives the business. It could be a top salesperson. It could be a person. If it's a technical business, it could be the person with the technical know-how or the scientific know-how. If it's a financial business, it could be the number cruncher. Could be the head actuary. So what happens if that person, God forbid, dies? The business there's a number of concerns the business has. Chief among them would be clients. The client's like, whoa, how are you guys going to keep providing services to me if your chief guy is gone? And so the surviving business is able to say, don't worry about it. We insured against the loss here. We're going to be able to keep our staff going. We're going to be able to keep providing service. And we're going to be able to keep afloat and hold out long enough to find a suitable replacement so that you clients will not suffer a diminishing quality of service. We're going to be able to get another person of the same caliber. Or, as you mentioned, Darren, if we have to dissolve the business, then it'll be done in a timely fashion, not in a panicky fashion, giving you clients enough time to find a replacement vendor. So the insurance check comes in, and everybody involved, from clients to vendors to employees, go shoo. Okay, nobody has to panic. This is not going to be a liquidation sale. We're not going to have immediate layoffs. It keeps everybody afloat and intact. Okay. Okay. So having said
There I
that,
am.
Darren, there you are. Oh, your wife was right.
Back.
I don't know. Yeah, you're right.
You
So
know,
having said that, Darren, would you say that there are certain types of life insurance that are used to indemnify a key person ahead of others, or does it depend?
it really depends. And to circle back, what you were saying, oftentimes we're talking about a key person as if it can only be one person. More commonly, it's multiple key people, depending on the nature of the firm. If it's a technology firm, maybe it's the chief information officer. Maybe there's a legal individual, an attorney that has a certain proprietary knowledge of that business. We work with a law firm, as you know, Steve, and there's multiple shareholders, and each shareholder has a specialty in a different discipline. Maybe one person is trademarks and patents, and another individual is whatever, a certain type of civil litigation. So it's protecting the business from the expertise, the specialty, the pedigree of that person, which would be very difficult, to replace. As far as the type of insurance, most commonly, depending on the age of the individual, usually some variety of term insurance, a longer term policy that would protect that individual for their foreseeable tenure with the company, or at least through retirement. I disappeared again.
That's right.
There are some instances where we'll use a permanent cash accumulation type policy, where they're using the death benefit aspect of the policy to protect the business. However, they have an agreement in place with that key person. Hey, the business is going to pay the policy as long as you're, a shareholder, a key person. And in essence, it becomes like a deferred compensation where they have access to the cash value, upon leaving the firm, retirement. So there's a bunch of different fun ways to structure that.
Okay, so that's interesting. So now you're talking about using life insurance for a dual purpose. You're saying on the one hand, the life insurance can be used to indemnify the business against the loss of the key person, and at the same time, the life insurance can be used to provide a special benefit, a special bonus to the key person. Okay, so that's utilizing both the death benefit and the living cash benefit of the policy, which is an interesting point because it shows it shows how deeply what kind of a deep role a key person plays in the business. Um, because a business is not going to want to secure the retirement of every employee, but they very well might want to secure the retirement of a key person as an extra perk for that person showing loyalty. So if I'm a real technical person and I have good scientific know-how and I want to get employed by a business, I'm going to want them to make it worth my while. So if we can work out a special deal where they'll get me a retirement fund that's much more substantial than your rank and file employee, that's a little bit more of my incentive to work there. And you're saying life insurance can
Yeah,
do that.
yeah. And just a side note, so typically the way it would be structured is the business would both own the policy, pay for the policy, and be the beneficiary. However, we've had scenarios where maybe X years down the road, amicably or not, the key person decides to leave the firm. Generally, because they are the insured, we can restructure that policy so they can take it with them, and then they can make it into a personal policy. As you and I both know, once you're approved and issued and you have that policy, it's pretty powerful to have that policy and hold on to it, because as we get older, even if we maintain excellent health, and I talk to a lot of people, where Steve, you've written the policy 20 years ago, and the person's like, I'm still in great shape. I'm like, everything's beautiful. However, you're 20 years older, so the cost of insurance is more. So, even though we're talking specifically about the purpose of this business policy, it's still life insurance. So, thinking ahead, we can certainly change ownerships and beneficiaries.
That's interesting. So, yeah, so that's an example of another unique feature of life insurance, which is kind of portability of an individually owned plan. It's
Mm-hmm.
portability, so that if the policy outlives its usefulness as key person indemnification, it could still be it can still be reclassified as personal protection or a personal retirement plan through some paperwork transactions, which everybody has to agree to, and so on. But the point you're making is that the insured doesn't have to go through underwriting, so that after 20 years later, if that person is unfortunately diabetic, or maybe they become a mountain climber and the mortality risk has changed, hey, they've already been underwritten. So they don't have to go to us and say, now give me the going rate for somebody that's 65 years old. No,
Right.
I'm good for now. So, okay, that's a very good point.
Yeah. I was going to say, and two quick points that are probably topics for another seminar with term insurance. I think last month we touched on conversion,
Yeah,
which I think we're going to talk about in the future. So a
yeah,
term life policy, just for anybody listening today or will watch the recording, the majority of term life insurance, whether it's for key person, individual, any purpose, the policy itself will have a conversion privilege. So back to the key person example, if they were to leave the firm at some point, well, they still have this life insurance policy. It has this conversion privilege, and maybe they need some amount of insurance to carry with them, through retirement. They don't need $1 million. Maybe they need 100,000, to cover final expenses and just add some basic liquidity to their estate, so their spouse doesn't have to liquidate things, when that day comes and the person passes away. And then the other thing, just because you said the word indemnification, another topic is using life insurance for loan indemnification, which we see
yeah,
quite a bit. So just a reminder to our friends and our clients, typically when you get a loan from a bank or another institution, that bank is going to encourage you to do some sort of life insurance through whatever channel that they provide. And I can virtually guarantee you that's probably not the most efficient, effective means of obtaining insurance. So if anybody has a requirement to obtain life insurance for loan indemnification, that's something we can definitely help with as well, whether it's individual or a business loan.
That's very true. And yeah, that actually should be another topic, the ins and outs of that. And it also relates to key person indemnification. Why? Because if I own a business and John Jones here is my key person, and my banker knows that if I lose John Jones to a plane crash, then my business is going to tank. My banker is going to say, oh, if you want me to loan you a couple of $1 million, you'd better make sure you don't lose John Jones. And, so then when I come out and they say, don't worry about it, I've got life insurance in John Jones, and unfortunately does die in that plane crash, I want to be able to stay afloat, pay my bills, and move on. I increase the likelihood of getting that loan. Um, at least I'm generating the goodwill that's needed to cut me some slack here. So that's exactly right. So that's an example about how my insuring, me as a business owner, my insuring my key people um, helps enable my other transactions with the people that I do business with, my banker, whoever else, because they know that I've secured my business against the loss, against catastrophic losses. And most certainly, the death of a key person would be a catastrophic loss. All
Right,
right, Darren, so we
right.
got like 2 minutes. Are there any other points you want to make to wrap up?
I was going to segue into another topic, but let's save that for
Yeah.
another program. But yeah, so again, we're talking about key person protection, but like I led off with, sometimes that flirts with other types of business coverage. I know we're going to talk about buy sell, which the purpose of a buy sell is again in the same unfortunate incident. If a partner dies, the life insurance is funding a formal or informal buy sell agreement. So we'll use that as a teaser for whenever we schedule the buy sell topic seminar.
Yeah, we're going to do that. Good point. It's a good way to end up. Thank you so much, Darren. Thank you, everybody, for attending. Um, Folks that have registered, you now have access to all our seminars. So please keep coming. You're getting notifications of the dates of future meetings and the topics. If you have topics that you want us to address, let us know. Reply to the emails. You can find me on Alignable. You can find me on LinkedIn. I'm happy to customize seminars around our clients' interest related to life insurance. And by all means, spread the word. You're going to be getting a link to the recording of our seminars on our website. Feel free to share those to people that are interested. Okay, thanks so much, everybody. Have a good rest of your day, and we'll see you next month.
Thanks, Steve.
Thanks, Darren.
Good to see you, Steve.